Friday, October 3rd, 2025, Maneco 64, home of alternative economics and contrarian views. Yeah, I'm in the hotel room. We just had some breakfast. And yes, yesterday I made a short video about gold that there wouldn't be too much of a correction on the way to like 4,300. And gold did correct during the day, but we're going to look at some charts. We're going to look as well today because many people want to know when things will reset, so to speak. We're going to look at when I expect the financial reset to happen. And we're going to look at charts to see when it happened in the past. We'll look at silver as well in relationship to gold, what I see going forward. And yes, we're going back tomorrow, Saturday morning. So probably won't make a video for Saturday, but we will be back for the Sunday live stream with Clive Thompson. And we've had a very good time here. Yeah, can't complain. But before I look at the reset, gold, silver, and yesterday's correction, so to speak, just want to talk a little bit about what's going on domestically in the UK. I see that while we've been away, there's been this attack on this synagogue. And we found out who the person who did it is. He's a Syrian. What do I think is happening? Well, this is just more of the divide and conquer, in my opinion. That's the deep state. They run these false flags. I'm not saying it's not real, but I wouldn't be surprised that the intelligence agencies aren't involved with this guy. And why do they do that? Well, because they want to keep Jews, they want to keep Christians and Muslims divided. Because if we're united, yeah, they lose. The powers that be lose. And I think financially they're in deep trouble, especially in the UK. And they want people focusing on that, not the finances, right? So that's all I'll say about that. And now let's get back to the reset. Some of you are probably aware of this. I've spoken about this many times in the past. We've been, of course, on YouTube for almost 10 years now. It's going to be 10 years in November. So actually next month. Time flies. But let's start with a reset. Financial reset, and by that I don't mean Klaus Schwab's Great Reset, of course. And I think the Dow Gold ratio chart is a really good way to look at it, especially the monthly one going back over 100 years, as you can see here now by this chart. So that's how many ounces of gold you need to buy one Dow Jones Industrial Average. And you can see that I've got reset 1. Well, that happened in I think it was 1932 or 33 or thereabouts. And the Dow Gold ratio dropped to around 2. So in 1929, it topped just around 20. That's when the price of gold was $20.67 per troy ounce. Of course, there wasn't a price of gold because gold was money at the time. And the Dow went up to, I think, almost 400. So it was like 20 to 1. And then we had the 29 crash and the final bottom in 32. So that's when things reset. And then Roosevelt came in, devalued the dollar, revalued gold in 33. So this is the reset period is a period of great monetary, financial, economic, and even social convulsion. And I think we're right in it right now. And so let's move forward. After that first reset, what the reset does, it allows the credit system to restart again. Yes, the Great Depression led to loads of bankruptcies. People unfortunately going broke. And then things started picking up again. Of course, it wasn't a straight line. And by the year 1966, we had another post-war credit boom. And I think the Dow topped, the Dow Gold ratio topped around 26. And I think the Dow topped probably around 1,000, I think. And then for 14 years until 1980, it pretty much went sideways, above and below that level. And the reason this ratio dropped from 26 to basically 1 in 1980 was that the Dow went sideways, or maybe even some stocks went up a bit. But gold went from $35 per troy ounce to $887.50, which was the high in January 1980. And that completed the reset. The debt to GDP at the time was 35%. Yes, there was a big recession, a double-dip recession in the early 80s. Reagan took over and things changed. And ever since then, we've had a massive boom, financialization boom. And technically, though, this credit boom that started in 1980 ended in 1999, 2000, late 1999, when the Dow Gold ratio topped just around 45, as you can see here. And ever since then, it's been going down. Yes, there was a rally, a correction back up when they threw everything at it to save the system. And by that I mean loads of QE, loads of borrowing, trillions and trillions upon trillions. You can see they did it again in 2020 when things were starting to crash. But now, as you can see, and this is a monthly chart, of course, we're keeling over. And I don't think we have much time. And by that I mean about 4 years, I would say, because if you look at the 1980 reset, we saw the Dow Gold ratio rebound from the mid-70s up until, let's say, well, I think it was around 74 to 76, sharp rebound. And then it dropped, and it took 4 years for that drop to occur. And I think we are keeling over. So it could be 3 to 4 years from now, and that would take us to the late part of this decade. Some people see gold continue to go higher up until 2032. Who knows? But I think reset number 3 might go past 1. And what will that mean? Well, that will mean, for example, if we go to 0.75, that you will need 0.75 or 3/4 of an ounce to buy 1 Dow. If it goes to half, that means you need half an ounce, and so on. At what level will we be in terms of the Dow and gold? Well, it's difficult to say, but I tend to think it's going to be a lot higher for gold, because they're going to keep inflating the system, because they can. In a fiat currency system, they can. And there's no stopping them, because politicians, they want to be reelected. So they will always lean towards more inflation. And we're seeing, despite the fact that Trump hasn't been allowed to sack Lisa Cook, that Trump has a lot more influence now. Central banks are losing their independence. Not that I believe they ever had it. If they were really independent, they wouldn't have saved the system in 08 and in 2020. When push comes to shove, yeah, they become political. So that's the way I see it. And as for yesterday, yes, some of you might have thought you kind of jinx gold You said there wasn't going to be much of a correction on the way to 4,300. But don't forget, I showed you a weekly chart. And this chart that I've brought up again here is from this morning. I updated it. And as you can see, that correction yesterday doesn't even register on this chart. So what I'm trying to say, yes, short term there will be ups and downs, but I've said this many times, hold on to your gold and silver for dear life. I saw someone on X, I forget his name, and I'm sorry that I'm not giving him I'm giving him the credit, but he's got like a Russian name. He's a Western analyst. And he said, well, people keep asking me what innings we're in the gold bull market. And he said, it doesn't really matter. He said, we are in a monetary crisis. And I agree with him. I'll try to find his name and put it down here when I edit this video. But yes, it's like, we're like in Zimbabwe, Venezuela, or Brazil when they had their currency crises. Would you want to hold on to those currencies? And it's the same thing with gold, because gold is the only way to protect yourself against the currency crisis of the major reserve currency, i.e. the dollar. Because technically the dollar used to be as good as gold. So we have to do like a regression theorem analysis. So that's the only way to protect yourself. And it's not just the dollar, of course, that's going to go. It's all fiat currencies. So that's that. So I've got here another Dow gold ratio chart. It's a weekly one and it's more short term. So you can see what's really happening now. We had a rally in the Dow relative to gold since April, but now we've broken this rising wedge, which is very bearish for the Dow versus gold. And it looks like we're going to dip a lot lower in the short term. Of course, 1-to-1 or less than 1-to-1 is probably 2, 3, 4 years away, or who knows, it could be very quick. But we will know when it happens because it will be 1-to-1 or even less. That's the way I see it. So let's look at silver. Because silver is doing well too. We traded to 48 yesterday. And then we corrected below 46, and this morning as I speak here, silver is at 47.30, up 33 cents. Gold is at 38.60, up $4. I think gold went down to 38.19. So yeah, the volatility is quite pronounced in the precious metals, and usually volatility in precious metals goes up as the market goes up. It's the inverse of the stock market. But yeah, so this, let's go back to the silver chart. Yeah, so it's the percentage of silver, the price of silver as a percentage of the price of gold, right? And Michael Oliver looks at it like this, and I think it's a good way to look at it. And as you can see, we're still in breakout mode. And we're still far away from where we were back in 2011. I think the gold silver ratio got down to like 31, and as you can see, the silver was just over 3% of the price, which makes sense. And then if we look at a more long-term chart of that, the silver price as a percentage of gold. If we go back to 1980, yes, that was around 6.5% of the price, which takes it to around that 15-to-1 level. So you do the maths. If we go to $10,000 gold, silver could be at 1,500, 15-to-1, or it could be Could be a bit less, but it will be a lot higher than we're now, and it's going to outperform gold because it does so in major bull markets in precious metals. The one in the 70s and the one in from 2001 to 2011. It did so. So we're still early days here for silver, I would say, and with that. Let's just quickly look at the markets this morning. So what time is it? It's 8:32 a.m. Here in Venice. So 7:32 a.m. in London. Spot gold, as I said, is around 38.60. High's been 64. The low's been 38.38. Silver up 30 cents. 47.27. The high's been 36 and the low has been 46.63. The Dow futures up 118. Nasdaq is up 85 and the S&P 500 is up 20. I see that the currencies are pretty steady. Crude oil is yeah, it's come off. I think OPEC announced they're going to increase production. I think they're trying to kill off the fracking industry in the U.S. because they need the price of crude way above 60 to remain like a viable industry. But right now, WTI is at 60.84. It's up half a dollar or 50 cents. And let's quickly look at the bond market, the 10-year yield. And I realize there's not going to be non-farm payroll numbers today because the BLS is shut down along with the federal government. It's not like an essential part of the government, like the military, for example. So yeah, the 10-year is at 4.1. It's still under control right now, but we need to keep an eye on this. It could change very quickly. The 30-year is at 470. But ultimately, I would say look at these assets like stocks, bonds, in terms of gold, because it's going to become more and more important. We are seeing that even Wall Street, i.e. Morgan Stanley, is looking at gold now. The 60-40 stock bond portfolio now is a 60-20-20, and the new 20, the 20 being gold, and the 20 being also bonds. And I think that's probably going to become more like 60-10-30, or I would get rid of the bond part actually, maybe with the exception for very short-term maturities like 3 months. Yeah, and I would actually make it gold and silver 60 and the rest of the stock market maybe 40. Yeah, oh, another thing, if you're ever in Venice, I went yesterday. I might go there again today. I bought a couple of silver coins, numismatic ones. Degani, recommend that. The lady there is called Chiara, and it's in St. Mark's Square. You can't, if you go around the square, you can't miss it. I highly recommend it. And she does stamps as well, if you're into stamps, which is philately. And of course, coins is numismatics. So you can see here, Philatelia numismatica. So highly recommend that. Anyway, with that, I'm going to wish you all a very good day and a great weekend. Take care. Bye.